Hello and welcome everyone. Thank you for joining another session of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FXPesa. So today we'll be looking at what happened yesterday at the World Economic Conference, Davos, where Trump presented a speech that ended up being the key driver in the markets. So we'll be looking at a summary of the speech, trying to understand what changed, what did not change, and of course, how the markets reacted. Later on, we'll look at the economic calendar, look at the events we're expecting today, do some technical analysis, and try to understand where the markets might be headed next. So as always, remember that this session does not constitute any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So still struggling with a bit of some flu, so my voice might be a little bit different, but much better than in the last session. So good morning, Lucy. I can see Simon in the house, Susan, Dante, Brayo. Thank you guys for joining and being the first to comment. Robert Cavale, Masikatana, thank you guys for joining. So let's get this done. So first things first, let's look at the performance of currencies, and this is since the beginning of the year as well as per today. So from the Finviz website, you can see that the weakest currency since the year started has been the Japanese yen, which is down 1.2% against the USD, whereas the biggest gainers are both Australian dollar and New Zealand dollar, being up 1.96% and 1.90% consecutively. So these are basically becoming the fan favorites for the year, Australian dollar and the New Zealand dollar. The Swiss franc, which was the best currency of last year, is also really fighting against the USD. Not much of a difference, only down 0.06% against the USD. So for the pound, the euro, and the Canadian dollar, they have all been pairing losses against the USD. And then looking in the past one day, we know there was positive news coming in from Australia. That is the job market data. This led to a 0.63% gain against the USD as of this morning, whereas the Japanese yen was still the weakest currency, down 0.33%. So one of the reasons this is happening to the Japanese economy, if you look at the bond market, you'll notice that the 10-year treasury has a yield that has gone all the way up to 2.2410%, and this is a level that was last seen over 3 decades ago. So this means that a very strong or a very high bond yield on Japan's 10-year bond means that a lot of investors are dumping Japanese bonds, and as a result, that may explain the weakness we are seeing in the currency. So that has been a key concept as per this morning, seeing Japan's 10-year bond yield rising that much. So if you were to check specifically on the chart, notice how fast this has been rising. So despite the pullback from yesterday, after hitting a high of 2.3535, despite the pullback, this is still a significantly high level. So if you look at the data, let's say you look at the last 5 years, last 10 years, you notice that this has been a parabolic increase in the yields for the Japan's 10-year bond. So it's the same for longer term bonds for Japan. So if you look at the 20-year, 30-year, 40-year, yields have only been increasing. You can see the 40-year bond has a 4% yield, the other one 3.67 for the 30-year, and 3.2 for the 20-year bond. Clearly multi-decade highs, and this means that there is a lot of dumping for those bonds. As a result, we are seeing an increased supply of the Japanese currency. So as of this morning, some of the key highlights include one of the key impacts of seeing the yields rising and investors dumping bonds, which has been weakening the yen. So a weak yen basically promotes exports. So Japan's exports climbed 5.1% year on year to a record of 10.4 trillion yen in December 2025. extending gains for a fourth consecutive month. The increase was driven by robust year-end overseas demand and a weaker yen. So while the overall impact of US tariffs proved less severe than initially anticipated, still, the latest result was below November's growth figure and market forecasts of 6.1% as Japanese automakers continue to face a 15% tariff on their US bound shipments. Exports to the US plunged 11.1% from a year earlier in December, weighed down by declines in cars, auto parts, and chip making equipment, a sharp reversal from an 8.8% increase in November. So sales also fell to South Korea, down 1.9%, and Australia, down 10.2%. Meanwhile, exports grew to China, 5.6%, to Hong Kong, 31.1%, to Taiwan, 22.7%, Vietnam, 13.7%, and Asian countries, 5.2%. The EU, 2.6%, Russia, 27.3%, and Middle East, 18.8%, whereas in South Africa, exports grew to 21.9%. So clearly, we are seeing a very strong Japanese economy with growing exports, and one of the key contributors is the weaker yen that we have been seeing over the last couple of months. So, other than that, also now focusing on the key topic of the day, that would be Trump says the framework of a future deal discussed on Greenland as he backs off tariffs threat. So, what happened yesterday is that a much anticipated speech by Trump at the World Economic Forum in Davos, there was a lot of key questions that investors were looking to get answers from Trump. So on one side, there was a question of whether there would be a physical, like all-army attack in Greenland, and Trump mentioned that this is not going to happen. So earlier on in the week, Trump had threatened to slap EU nations with 10% tariffs and a further 25% tariffs on the 1st of February. And this had sent shockwaves across markets. So we had seen a lot of panic selling from Monday happening on European equity indices as well as American equity indices, which includes the SP500, the Dow Jones, the Nasdaq, the Russell 2000. And on the European side, we had major indices such as the DAX, the CAC 40 from France, the IBEX, and many other indices were also showing weakness as a result of panic selling following Trump's threats of implementing tariffs on European nations. So what ended up happening, Trump mentioned that he is very positive that him and the NATO leaders will come to an agreement. So he withdrew the threat of implementing tariffs on European nations. So after uttering the transatlantic alliance with weeks of rhetoric, the US president said the discussion had led to the framework of a potential agreement. But there was no suggestion of a deal that might meet Trump's demand for ownership of Greenland, an ambition he restated at the World Economic Forum in Switzerland, where he also ruled out military force. So on Truth Social on Wednesday, the US president said, "We have formed the framework of a future deal with respect to Greenland and, in fact, the entire Arctic region. This solution, if consummated, will be a great one for the US and all NATO nations." Secretary of State Marco Rubio and Special Envoy Steve Witkoff would report directly to him, he added, as negotiations continued. So the Danish Foreign Minister, Lars Rasmussen, said in a statement that the day is ending on a better note than it began. He added, "Now let's sit down and find out how we can address the American security concerns in the Arctic while respecting the red lines of the Kingdom of Denmark." So in the hours that followed, some details trickled out. After meeting NATO Secretary General Mark Rutte at the Swiss Alpine Resort, Trump told reporters that the possible deal could involve mineral rights. He also said European allies could work together on terms other than plan for a Golden Dome defense system to protect the US from long-range missile strikes. Along with Greenland's strategic location, The US has spoken about the island's vast and largely untapped reserves of rare earth minerals, many of which are crucial for technologies including mobile phones as well as electric vehicles. So, on asked about the stock market, Trump had a few comments. So one of the key comments that he mentioned is that the current dip in the stock market is peanuts, and he mentioned that he expects the stock market, the U.S. stock market is expected to double within the coming months. So he did not specify the period, but he said that he expects the U.S. stock market to double. So at the same time, he also reiterated his promise to make the US the crypto capital of the world. And once he mentioned these, we heard out of assets in the crypto markets recovery. Also, the US stock market as well as European stock markets also made strong recoveries. So he also promised that he expects the great bull market in the crypto space to resume this year. So clearly boosting the markets both on the crypto side as well as the equity side. And that's when we had the big reversal beginning to happen. So if you're watching the markets yesterday, you must have seen out of things changing. So another news, we heard the CEO of world's biggest chip company, which is NVIDIA, presenting at Davos, and he basically brought in a lot of positive sentiment towards the AI sector. So global chip stocks soar as Huang helps fuel AI euphoria at Davos. So global semiconductor stocks advanced as comments by NVIDIA Corporation Chief Executive Officer Jensen Huang at Davos helped reinforce investor enthusiasm for the artificial intelligence trade. Memory chip maker Samsung Electronics gained as much as 5% on Thursday to an all-time high, helping drive South Korea's benchmark Kospi above 5,000 for the first time. So that came after the Philadelphia Semiconductor Index rose more than 3% to a fresh record on Wednesday with a boost from NVIDIA. The gains came amid broad risk on trade after the US President Donald Trump withdrew his threat of tariffs on some European nations or backing for Greenland. Huang further fueled that rally with his comments to the World Economic Forum in Switzerland, saying that the global AI build-out will require trillions of dollars of investment. Davos is all about AI revolution, Wedbush Securities analyst Dan Ives wrote in a note. Well, there are clearly geopolitical worries in a constantly changing global landscape. The one thing that is clear from Davos is that the US tech world is dominating an AI revolution, with China is a distant second. The AI boom is riding high into 2026, defying concerns about lofty valuations, as well as tensions between various nations. Earnings due later Thursday from Intel Corporation may shed further light on crucial industry capex plans, along with results next week from Apple Incorporated and Meta Platforms. The expansion of AI infrastructure and a surge in data storage demand are further tightening overall supply, said Ha-Seok Kun, Chief Investment Officer at Eugene Asset Management Company. The market is now increasingly pricing in these strengthened industry fundamentals. So clearly, the speech in Davos by Jensen Huang drove more optimism into microchip stocks, and we'll be following closely today. Of course, with NVIDIA closing at $183.18 per share, and also trading even higher in after-hours trading, gaining by 0.38%. We expect to see more performance today. And of course, you can see AMD was up 7.71%. Asus Tech Computer up 2%. And of course, we will be expecting to see more tech companies performing well, especially in the microchip sector. So I'm trying to see if I missed any other headline. So far, so good. So let's look at the calendar for today. As I mentioned, one of the strongest currencies as of this morning is the Australian dollar. So having reported their job market report as of this morning, you can already see that the job creation in December was 65.2 thousand jobs compared to the expectation of 28.3. So this was more than double the expectation. And of course, the prior reading was negative 28.7K, which was revised lower from negative 21.3K. So this shows a big turnaround for the Australian economy, with more jobs being created and the unemployment rate improving from 4.3% to 4.1%, which beat the expectation of 4.4%. Clearly, a very strong market for Australia. And whenever you see more jobs being created in an economy and unemployment rate reducing, then that positive is aligned with the performance of the currency. So, of course, we expect the Australian dollar to continue being strong, especially for the week. So, fast forward for the rest of the day, we will be going into the fourth day of the World Economic Forum annual meetings in Davos. Then at 4:30 p.m., we'll be looking at the US economic growth, or what we call the GDP, gross domestic product, quarter over quarter. So the final report will be coming up at 4:30 p.m., where we expect a 4.3% economic growth in quarter over quarter measurements. So we'll also be looking at the weekly unemployment claims, which are expected to increase from 198,000 to 209,000. These are the number of people who are filing for unemployment insurance for the first time. And usually it's a key indicator of trends in the labor market. So if the labor market is worsening, this complicates issues for the Fed. But I believe the key driver in the market would be the final GDP data, especially if there is a discrepancy between the forecast and the actual data outcome. So then later on, we'll be getting the Fed's favorite measure of inflation, which is the core PCE price index, which is forecast to have increased by 0.2% in the prior month. So I'll try and use a different calendar just to show you what's the expected for the year. So for the PCE price index year over year, the prior reading was 2.8%, and we expect that to remain the same on the forecast. Then for the core PCE price index, remember the core is refined. It doesn't consider the volatile prices of food and energy. So for core PCE price index year over year, which is coming up at 6 p.m., we expect a 2.8% reading, and the forecast is 2.7. So there's some difference between the consensus as well as the forecast. So if we happen to see much weaker inflation, as remember yesterday Trump declaring that they had won the war against inflation. So if this comes up true and inflation reduces, let's say, below 2.8%, then this would likely mean that Trump was right, and as a result, we could be seeing more optimism happening in stocks, as well as the dollar. So US equity indices could benefit from a much lower core PCE price index. So other than that, I don't think we have any other major event for the day. Yes, of course, we have the weekly crude oil inventories. This is bi-weekly. So crude oil inventories data will be coming in at 8 p.m. Here we're expecting a draw of 1 million barrels compared to the previous reading, where there was an increase of 3.4 million barrels. So if there is a draw, means that there is a scarcity, and that the US crude oil stocks are reducing. As a result, this could drive prices higher. But then if we see an increase in inventory, then that would likely mean that we see much lower prices in Brent as well as the WTI counters. So of course, Friday, which is tomorrow, we'll be starting with the inflation report at 12:45 a.m. This is just past midnight, where we expect inflation in Australia, in New Zealand to have reduced to 0.5%, down from 1.0% in the prior quarter. So we'll also be looking at the national core CPI for Japan, which is expected to slow down to 2.4%, down from 3%. And then a very important interest rate decision by the Bank of Japan. Of course, the overall market consensus is that there won't be a change. We expect the Bank of Japan to continue holding rates at the current level of 0.75%. But then some investors are worried whether there could be a surprise rate hike, maybe to 1% on this meeting, though highly unlikely. So investors will be watching closely, especially with the weakness we have seen with the Japanese yen. It's not out of bounds to see a surprise decision. Of course, this will be a major mover for the JPY pairs, as well as for the Nikkei 225 index. Then at 10 a.m., we get retail sales from the UK, where we expect a 0.0% change over the prior month. And then for the rest of the data, we will also have convened the next market snapshot. So this will be handled by Prudence Maximilian, especially on flash manufacturing and services PMIs across major economies. So that's it on the economic front. So now we look at what we expect on the technical analysis side. Of course, if you have any questions, feel free to type them on the comment section, and I'll be responding to the questions as we proceed with the session. All right. So this is the MetaTrader 5 trading application. It's the app that we use for trading on desktop as well as on a laptop. If you prefer trading using a smartphone, make sure to check out the Equity Trader by FXPesa. It's available on Play Store as well as on your App Store if you are an iPhone person. I'll type the app name on the comment section. You can feel free to check it out. So I'm checking on the comment section to see if there's any question we may have missed. So there's questions to check on the EU, that's the Euro USD, I'm assuming, gold and USD JPY. There's a comment to check on Euro USD. Of course, we'll be checking on that. So good question. What is the market reacting more to? Considering Trump's speech, is it tariffs on European nations or the fact that he would use force in pursuit of Greenland? Well, what he mentioned is that he will not be using force in the pursuit of Greenland. So that much was clear, and the threat of tariffs on EU nations was removed. So there is no threat of tariffs. So as a result, the markets are much calmer and more confident now. So what we are basically witnessing is something we witnessed so much last year, which is a trade that we described as the taco trade, or the Trump always chickens out. So when he's very aggressive talking about something, it's usually the sell America trade, sell the dollar, sell the US bonds, sell the US stocks. So you see that kind of panic when he's very aggressive. And then once he panics, then we see the markets are making a V-shaped recovery. So in this case, Trump always chickens out is a trade in play right now. So let's begin with the reactions of gold. So while the markets were recovering, what we saw was a panic selling happening in gold as well as in silver. And as we have been discussing on prior sessions, whenever you see that kind of price action in both silver and gold, which if you check your daily time frame, you will see that these are markets that are moving vertically. Then you know that the pullback is a blessing. The dip is a gift. The dip is a gift. So we got some very nice dip here. So despite having this as the key level bottom, there was a sharp dip yesterday, which went below here. So notice how that for 3 consecutive days, these were the lowest prices. So we got a sharp dip and immediately the market recovered. And now you can see for the people who bought the dip, they are continuing to enjoy as the market continues recovering. And we could potentially hit 95.337 for silver, and for gold is the same thing. So normally we wouldn't get such a huge pullback. I would say this was the lowest price. So now our target is what we saw as the New York session high as per yesterday. So what we are seeing is the market bouncing from this area and potentially going for 48.80. So remember, yesterday's high was basically a new all-time high for gold. So despite the pullback, where the dip is a gift, we look at the daily time frame. It's a very strong bullish market. So we go to the 4-hour time frame. You can see that we had a very strong bullish momentum since the beginning of the week. A pullback already happened yesterday, and now you can already see the market bouncing back and pushing towards previous highs. So in both gold and silver markets, which have been very strong, you don't want to buy at all-time highs. You want to wait for a dip, and the dip happened yesterday. And as I keep saying, the dip is a gift. So on the oil prices side, we had bet that the market would potentially break the 62.837 dollars per barrel. So this did not play out on Tuesday. So on Tuesday, what we saw was the market moving down, getting to this bottom here, and then eventually bouncing. Then Wednesday kept going up, and today we are seeing some form of reversal playing out. So after the strong bullish momentum yesterday, today it seems like we are going for yesterday's low, somewhere around $63.27 per barrel after having bounced from this particular resistance here. So US equities had opened the week with a gap down due to panic selling. You all remember the strong rhetoric by Trump that he must get Greenland, and anyone who stands in the way, they are going to face tariffs. And all those threats, they led to panic selling across the weekend. So on Monday open, there was a sharp drop. Tuesday, we continued moving lower. And then yesterday at the speech, the area highlighted in yellow is what happened during his speech, and the market completely reversed for the Dow Jones, kept pushing higher, and now we are almost closing the gap. So the gap that we had over the weekend started at 49,366 price level. And it seems like the market is headed straight there to close that gap and perhaps even move higher. So that panic selling wasn't going to last for long. The Nasdaq already closed the gap. You can see the gap, the weekend gap here, and now we are closing higher, which means that our next target would be the previous high. So the previous high was the high we saw on Friday last week. So Friday's high was around 25,737 price action level. So that could be a nice target for the day. And then you look at the SP500, we are yet to close the gap. So the gap had started at 69.41, which was the closing price on Friday. So we expect the price to completely close the gap by the end of the session today. So BTC had a sharp, strong rally during Trump's speech. And then after the speech ended, there was a sharp drive all the way back down that was more like a liquidity grab at $87,271 before bouncing and getting back to levels above $90,000. But still, we are in a very sharp dip compared to the prices we had seen last week, where Bitcoin had hit 97,949. So this week, a sharp drop to 87,000. So from last week's high to this week's low is a difference of $10,000. And now, looking at the green candlestick yesterday, there seems to be some evidence that buyers are coming back into this market. So yes, we know it's a sideways momentum for the longest. I would say from November last year, we've just been swinging up and up and down, above 90, below 90, above 90, below 90, and now we're on the we just got out of a downswing. So I believe the BTC is entering an upswing, and with this upswing, there is that potential of a strong rally coming up from this area here. perhaps towards the upper trend line, so perhaps towards levels above 97K. So on the European indices side, you look at uh, the German DAX, which had a bit of a sell-off. Notice from the all-time high, the drop was about 4.55%. So after the speech by Trump yesterday, which you can identify here, led to a strong rally. Towards midnight, there was even a sharper bullish momentum. Then from there, notice that the market was unable to push higher. So a slight pullback this morning, and now it seems like as we enter into the London session, we might be headed for closing that weekend gap. So the weekend gap was here. The closing price on Friday versus opening price on Monday. So now that the market is bouncing from here, good chance that we see a rally to 25,310 price level, closing the gap that we had seen on the weekend. Now that bullish momentum has resumed in the markets. So EU50 also looking to close the gap. I would say the gap was all the way up here. So after the sharp drop, I remember on Tuesday we were projecting drops towards this area here. We got very close, but not the exact price. So this is as close as we got. And now we're looking at the continuation of the recovery. So potentially hitting a 6,034 price level. For the French stock market index, notice that this was where the weekend gap had started. So as we continue pushing through this recovery, so a target level of 8,259. The Swiss stock market index also had a big gap, a big weekend gap. So here is our target, 13,419 price action level. So these will be pretty easy to trade going forward, given that what we were seeing as panic selling is now being reversed as we continue trading. So for the Hang Seng Index, we are seeing a reversal overall from the H1 time frame, where on one side, the bearish momentum kept getting weaker and weaker. Then yesterday, some form of recovery. Today, a push even higher. So from the H1 time frame, it seems like the bearish momentum has come to an end. Now we resume bullish momentum, pushing towards the previous high of 27,213. So for the UK 100 index, we projected a drop to this area. We got it to the point. The area was marked from the previous high here, now turning into a support. So now we are seeing a recovery. And of course, due to the weekend gap here, then our target is most likely towards the upper side, around 10,258, looking to close that gap. So for the Nikkei 225 index, we had projected these on Tuesday. The market would breach, retest, and continue, which played out perfectly but did not move for long. So what we saw was the market pushing even lower, but then the bottom we got was not the one we had anticipated. Of course, we were expecting the market to go all the way down to around this area here. So we got our bounce yesterday, and the market started recovering. And now what we are looking at here is a market that is expected to retest its previous highs, and the previous highs are around 54,456. So some bullish momentum here towards this area here. Then on the currency side, the yen, as we mentioned, is still very weak. So despite the dollar being weak, you can see, for instance, the sharp drop here. The dollar is losing to the yen ahead of the interest rate decision tomorrow. But then I wouldn't be overly optimistic of a strong yen here. So yes, on one side, the dollar hit some resistance and it's reversing. But overall, I would expect the dollar to keep pushing against the yen, given the weakness we are seeing across board. So on the other hand, looking at the dollar trading against the Swiss franc, remember, as we mentioned, the Swiss franc was last year's best currency among the majors. And now here you can see that after the dollar rallied yesterday against the Swiss franc, today we are seeing the complete opposite, and we could be seeing the market going for yesterday's low. So here we are seeing a market that found resistance here and now is moving further back downwards. So on the short run, we should be expecting the market to be retesting yesterday's low. So from the 4-hour time frame, this is how it looks like. So after we go to this particular trend line, there was a sharp drop, a pullback, and now a continuation, and we never really got to a key level support for the week, looking to exploit even further bearish momentum. So Euro USD had really surged. You can see how the euro was really gaining against the dollar. But then since yesterday, you can see the reversal here. The dollar started regaining some momentum against the euro. So there was this pullback. So from this perspective on the 4-hour and also from this perspective on the daily, we know that over the last couple of months, it has been a slow grind on the euro. I wouldn't say that this market has been moving up or down. I would say it has been more of a sideways grid. Yes, there has been a lot of up and down momentum, but for 7 consecutive months, it's more of a sideways momentum. So you go to the weekly chart and then you start looking at last week's price action. This was the high, this was the low. So we started on a very strong bullish momentum, got outside of last week's momentum. Then you move to a smaller time frame, in this case, the 1-hour time frame. Then you notice that we had a very strong trend line here, which was consistently acting as resistance. If I zoom out, you can see it starts all the way here from the top. Just a sec. Yes. So this was our particular trend line, and after breaking these on Tuesday, Wednesday, a pullback, it seems like the euro has resumed some form of bullish momentum. So perhaps we should be observing this particular pattern playing out here. So from yesterday's price action, this seems to be a key level trend line. And then on the upper side, there seems to be some form of consensus around this area here, with the exemption of this attempt to break higher there. So there seems to be some form of flag playing out on the Euro USD pair. So we wait patiently and look for the eventual break. But personally, I would think that the euro is going to regain some momentum and and potentially retest the previous high, which was around 1.17421. So on the pound side, notice how we had the strong bearish momentum as of this morning, but then the market reversed immediately. So here we are seeing the pound show some resilience against the dollar. So yes, this has been a key level trend line since the last 2 days, but then it seems like the current momentum is on the verge of breaking this particular resistance, which would imply that we see some form of continuation. So noticing that this is some form of triangle and some form of consolidation, the idea here is that the pound continues recovering against the USD and we get towards the previous high. So with very short-term targets being around here, 1.34637, and with potential extensions towards the weekly high around 1.34941. So AUD USD, after the strong job performance against the dollar, you can see the daily time frame and the price level we just hit was a key resistance sometime back. But overall, the trend here can be identified as strong bullish momentum. And the last time we had a swing extending that high was back here. This was in September 30, 2024, which means almost 2 years ago. So clearly, in the short history, you'll notice that in the month of January, this is the 7th, this was the highest price. So in 2 weeks, we got to break that particular resistance. So after breaching that resistance, notice how there has been an acceleration in price, and now there is a temporary pullback. So yes, you want to trade in the direction of the trend, which is bullish, but then the market is at the very top. So in such a market, as I always say, wait for the pullback, and then continue trading in the direction of the trend. So anything that would look like getting back to this area would more than likely be welcome for a potential bull market trade. So for now, in the short run, it seems like the market is about to pull back. So here we are seeing the formation of some form of flag. So let's just observe the price action here. Remember, this is the 15-minute chart, so you observe and wait. So for New Zealand USD, we just broke above a major resistance. So from the 4-hour time frame, you can see this was the highest price, and this was on the 24th of December last year. So the market broke above that area here, and after breaking, there was a pullback, and then now we are looking at a potential continuation. So here we expect further bullish momentum. Of course, the next key level will be the beginning of this strong bearish momentum that played out here. This was in September 18th last year. So we would expect the market to push through and get to 0.59582 price action level. So that is it from my side. I believe we have covered pretty much everything we should cover. So I'll be checking to see if there's any more questions before we approach the end. So good question here. If I do analysis, then the TP got like 600 points. Can I enter such a trade with a lot of 0.01 with a margin of 5? I don't know. 0.01, you're targeting 600 points. Your margin is what? 5? 0.01 gives you what? 500 points. Yeah, you'd be going full margin, which means that if the price was to go against you by the same measure of what you're targeting as take profit, then you would most likely lose your entire account. So you'd have to be very, very sure about your trade. So I'm not saying it's not doable. All I'm saying is be very careful with this kind of setup you take. It's easier to build a story than have one home run that doubles your account. So the metals might extend the rally after Trump's speech yesterday. Yes, absolutely. That did not change the outlook on the metals or the demand and supply functions. So it was only some form of panic rotation where investors had more appetite for risk, given that some of the uncertainties that were there in the market were eliminated after Trump basically cleared the way, mentioning that there will be no more threats of tariffs against the EU nations. There's no physical occupation of Greenland, and as a result, markets got some confidence, so less demand for safe haven assets. Then overall, we know that the trend has been bullish, and a dip is a gift. So the oil market has been a little bit noisy. I think we've already covered it. So more of a sideways momentum over across the last 5 days. But then overall, you can see that Trump is really pushing for weaker oil prices. So here, Trump has been pushing for this bearish momentum. So since last year, the overall direction in oil prices has been bearish. So on the other hand, after the sharp rise that we saw following the Venezuela saga, here we are seeing a sharp drop, and we could be seeing the market erasing some of these gains within a short period. I don't know why Albert Chebo would be sending stuff around Pakakumi. That's weird. This is a serious session. How does Trump's speech affect the German 40 benchmark index? So the speech was to the EU nations in Davos and other attendees. And remember, the German stock market index was in panic selling mode after Trump had threatened that he would slap 25% tariffs on EU nations that don't support Trump's acquisition of Greenland. So yesterday on the speech, Trump said that he will not be implementing those sanctions on the 1st of February. So removing that threat brought back confidence into the stock market, especially the DE40. And as a result, we expect the DE40 to fully recover because the big drop we were experiencing in the index was as a result of Trump's actions, and he kind of chickened out on his threats. So on the question about Euro USD hitting yesterday's previous high, it doesn't. When I say that the Euro USD will likely move back to yesterday's high, it doesn't imply that it will happen within the day. So it could be extended. It could take 2 days to get back to the previous high, but this seems more like the most likely outcome. So yes, I'm expecting the EU to retest yesterday's high. How long it will take, I don't know. So that's from Sami. I have a problem with password reset on equity FXPesa on my phone. Kindly call your account manager. They should be able to reset. And also you can go to FXPesa.com website, and then from the live chat, you can get assistance. You can also email support@fxpesa.com. You can inbox us through our social media handles. All those methods work, and we have 24-hour support. So last question here. Rufus, do you still think the stock market news will continue driving up after the grab of Monday's void? Yes, I expect the rest of the performance to be driven by earnings. So it will make more sense to watch the earnings after we cross the weekend gap. So after we close the weekend gap, let's focus on the earnings. Of course, we'll be having more companies reporting earnings, including Meta later in the week. That should be end of the trading session today. That is after market close. Other tech companies such as Intel will also be reporting earnings. So those earnings will be the key drivers of the stock market after recovery. So do you think the indices will continue going up after the grab happening on Monday's gap in the Nasdaq? Yes, I expect the bullish momentum to continue. And as I mentioned, on one side, we expect Trump's chickening out to lead to a position where the markets fully recover from the sharp drop. But then once we recover from the drop, there could be some profit taking. But overall, from there, the key driver will be earnings. Earnings will be the key driver. So Samuel is saying that he'll be checking for bullish momentum after we took the January low. I don't know about that. As I mentioned, for me, it will be earnings being the key driver of the Nasdaq. That is after we see full recovery and the market closing those gaps that had happened over the weekend as a result of Trump's threats against the EU nations. So that is it for the day. Thank you guys for attending. Thank you for your time. If you don't have a trading account, make sure to check out the links in the description below. If you're watching this on X, remember to like and retweet the live. Also, you can visit FXPesa official handle, and from there you'll be able to get links to register for a trading account. It's free of charge. Your account will get verified roughly within 10 minutes. Then from there you can begin practicing and learning about trading. So make sure to check out new episodes of the Bullish Banter podcast on FXPesa's YouTube. There you'll gain more insights about the markets as well as what other traders have gone through, their experiences. We do a lot of interviews, so make sure to check it out and always share the feedback. Like and subscribe to the channel. Let's meet on the next session, and I wish you a happy trading day.